TSMC published their financial results recently, and they are simply incredible. Revenue is up by 38.8% year-over-year. Net income is up by 57.1%. That is just crazy. Cash is also up by 45.2%, and debt is down by 5.7%. But as investors, we shouldn't concentrate on the short term, but instead take a long-term approach. So today we are going to go through our 7-step analysis process to understand just how strong and crucial TSMC is for the world economy, what could the future of this company look like, and we will also value this company to see if it could be an interesting investment opportunity or is the risk just too high. Taiwan Semiconductor Manufacturing Company produces about 90% of the world's most advanced computer chips. They are an essential part of the success of companies like Nvidia, Apple, Tesla, and many more. That makes TSMC one of the most important companies in the world, located on an island that's at the center of significant tension between two major superpowers, the US and China. It's also important to mention that while TSMC produces semiconductors primarily in Taiwan, they also have factories in Japan, China, and the United States. Their most advanced semiconductors are manufactured in Taiwan. But this diversification provides a bit of a safety net if things were to go terribly wrong between Taiwan, the US, and China. So let's take a closer look at TSMC. If you invested $1,000 in this company 10 years ago, you bought 44 shares. And today, they would be worth something close to $9,630. And during those 10 years, you would also get $584 as dividends. So if we add together the current value of shares and the dividends, we get $10,214. And that is a gain of 921% in 10 years. That is a great result. And this growth is not slowing down. Last year, the shares of TSMC went up by around 81%. So let's see who benefited from this incredible growth. Individual insiders, that is an X, 0.4% of the company is owned by individual insiders, and we would like to see this number over 2%. But TSMC is a bit of a special case. From day one, it was not really a private business, but a project of the Taiwan state. So the fact that the majority of the leadership team has some shares is actually a very good sign. And are individual insiders buying? That is an X. We don't see any transactions from insiders. And do super investors own this company? That is a check with 12 super investors, including David Rolfe, Stephen Mandel, or Chase Coleman. And are super investors buying right now? That is an X. Recently, they bought almost 700,000 shares and sold over 2.6 million shares. So a meaningful difference. But let's try to understand why 12 great investors believe in TSMC and its future. Return on invested capital, that is a check at 21.6% 10-year median returns. And we want to see this number higher than 10%. So that is a very nice result. And what do we know about net profit margin? It is also a check averaging 38.4% over 5 years, and the industry median is 5.2%. So that just shows the position of this company in the entire ecosystem. And now let's take a look at share buyback. It is an X at 0%. The number of shares of TSMC is not changing at all, so basically it is an X and a check at the same time. Yeah, that makes sense, right? Okay, and the debt, it is a check. It would take them just over a year to pay the long-term debt with a current free cash flow. But what is very important is that they also have twice as much cash as they have debt. So their financial situation is absolutely great. But financial health is only a part of the story. As investors, we love to own a strong, stable company, but what really makes such a company a great investment is its growth. Revenue growth, that is a check at 13.2% 10-year compound annual growth rate. And we would like to see this number higher than 10%, so a nice growth. Free cash flow growth, that is a check at 16.6% in the last 10 years, so even better. And earnings per share growth, that is also a check at 16% in the last 10 years. So that is very impressive. We of course see companies growing much faster, but when we take into account that they are growing organically without any substantial debt or without issuing new shares, then it starts to look really nice. Because such growth is not only sustainable, but much more secure for the long-term future of the company. And as investors, we love growth, but we can also get some of our money back thanks to dividends. The dividend yield is 1.1%, so shareholders can expect to get $2.47 annually per every share. And the payout ratio, that is a check at 34.7%. And we want to see the payout ratio somewhere between 20 and 50%, so that is very nice. We are getting a decent amount of earnings as dividends, and the company keeps the majority of it to support growth. And what about dividend growth? It is a check at 2.8% 5-year growth rate. So even though dividends look nice, it is clearly not a dividend play. There is much more to this company. So let's see, can we get it at an reasonable price? Price to earnings ratio is 34.4, so that is a lot. Average PE for the S&P 500 is 27.9. So basically the entire market is expensive, but for TSMC we have to pay even more. Now you may argue that this is obvious because it's such a great company. However, we must also remember that no company, no matter how great, is worth an infinite price. But to properly value TSMC, we will use a discounted cash flow analysis. And if you would like to know how to value companies by yourself using 4 most commonly used models, then head over to stockinvesting.academy and choose our company valuation course. Okay, so first we have to estimate the growth of TSMC for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. So in the low scenario, we will estimate a growth of 12% for the first 5 years and then 10%. In the medium, 15% and then 14%. And in the high scenario, 19% and then 17% growth. So the low scenario is below the predicted growth of the industry, which is around 14.9%. Medium is close to the predicted growth and also to the growth we saw from TSMC in the last decade. And the high one is showing a story in which this company will actually accelerate its growth. And with changes in the world like AI and robotics, it is possible. So, with such estimates, the intrinsic value in the low scenario is $131, in the medium $167, and in the high scenario $214. But we have to always apply a margin of safety to those prices. I use a 30% one. And with such a margin, we get in the low scenario $91, in the medium 116, and in the high one 150. And the current price is around $221. So TSMC is definitely expensive, and for one of the most important companies in the world, that shouldn't come as a surprise. But probably because of the geopolitical tensions, it is not crazy expensive. But before we make any investment decisions, let's try to put everything we learned into perspective. TSMC has great financial health, nice growth, and a dominant position in the industry. And that is all great, but we also have to take into account the geopolitical risks and the price, which is not exactly a bargain. But let's actually use our Stock Ranking Pro, which you can get access to by becoming a Patreon, and compare TSMC with some of other great businesses. So let's filter our ranking so that we will see only semiconductor companies. And let's sort them first by net profit margin. And we see that TSMC has the highest margin of them all. It also has the second lowest debt. And when we get to our scores, we see that TSMC has the third highest overall score. So that just proves the quality of this company. But let's see how it compares when it comes to valuation. Let's go to value difference. So, as you can see, it is somewhere in the middle. We can find much cheaper companies, but also substantially more expensive ones as well. Well, it is very appealing to own shares of one of the most important companies in the world, but we should take into account that it is not only quite expensive, which is understandable, but also that there are extra risks associated with this company because of its location. But then again, if TSMC gets into trouble, basically all the tech companies will be in trouble. Thanks for watching and see you in the next one.